Good evening, guys. Good evening. Good evening. I believe you can hear me. Sure, you had a good weekend. I believe you can hear me loud and clear. If you can hear me, please drop a comment. Can you hear me? Can you hear me? Sure, you had a great weekend. Sure, you had a great weekend. Can you hear me? 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 If you can hear me, please confirm. Can you hear me loud and clear? Can you hear me loud and clear? Can you hear me loud and clear? Can you guys hear me? Can you hear me? If you can hear me, please drop a comment. If you can hear me, drop a comment, drop a comment, drop a comment. Can you hear me? Can you hear me? Waiting for your comments. Can you hear me? 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 All right, all right, all right, all right, all right, all right, all right. You all can hear me. If you can hear me, please drop a comment. Drop a comment if you can hear me. If you can also see my screen, please drop a comment. Can you see my screen? Good evening. Welcome you all to tonight's live stream. You're welcome. You're welcome. You're welcome. Drop a comment so that I can recognize you. Drop a comment so that I can recognize you. If you have any question, if there's any pay you want us to look at tonight, please let me know in the comment section. If you have any question and if there's any pay you want us to look at together tonight, let me know in the comment section. You are welcome. Okay, let's go. Let's go. Let's get started. Let's get started. If you have any pair you want us to analyze tonight, drop it in the comment section. If you have any question, please drop it in the comment section. Okay, so we'll start by looking at the fundamentals for the week. I want to believe you all can hear me. So let's start by looking at the fundamentals for the week. Today is Sunday, February 23rd, and German federal elections. Okay, it's holding today. Yeah, today, Sunday, starting Sunday. Yeah, all day. Okay, Europe. So expect high volatility on Euro pairs this week. Okay, 23rd to 28th. Okay, so let's see the calendar for the week. So Sunday, Euro German federal elections. What's all about? Every 4 years with snap elections possible in between. The winners will likely be projected before the official vote count is announced based on early vote count and exit polling. Okay. Then on Monday, there is no major news on Monday, so you should expect low volatility on Monday. No major news. No major news to drive on price action on Monday. Then on Tuesday, consumer confidence will be released from the United States. The previous value is 104.1 and the forecast value is 103.3. 103.3, that's the forecast value. So they're expecting a decrease in value. You can see the previous is 104 and the forecast is 103. So wait for the actual data to be released. If actual is higher than forecast, that will be positive for the dollar. And if it is less than the forecast, that will be negative for the dollar. I want to believe you all can hear me. If you can hear me, please drop a comment. I want to be sure I'm not talking to myself. If you can hear me, drop a comment, drop a comment, drop a comment. Okay. So consumer confidence. So wait for that on Tuesday by 3 p.m. Tuesday by 3 p.m. Then on Wednesday, 12:30 a.m. Nigerian time, Australia will be releasing its CPI data. That's Consumer Price Index by 12:30 a.m. Nigerian time. If you're interested in trading the Australian dollar, you should be awake by 12:31 a.m. to take advantage of this major news that will be released. So the previous is 2.5, the forecast is 2.6. Okay, so they're expecting an increase that's like 0.1% increase. We'll wait for the actual to be released. Okay, wait for the actual to be released. If actual is higher than forecast, that will be positive for Australian dollar, and if it is negative if it is negative, if the actual is less than the forecast, that will be negative for the Australian dollar. So, for example, if you're considering trading Australian dollar USD, if the data comes out positive for the Australian dollar, you would buy Australian dollar USD because it is expected that Australian dollar would gain value immediately the news is released. Okay. And if the news is negative and you're considering trading Australian dollar USD, you should go bearish. You have to sell the Australian dollar because it is expected that the Australian dollar will lose value if the actual is less than the forecast. I hope that is clear. Then on Thursday, prelim GDP, that's gross domestic product, and also unemployment claims will be released from the United States. These are major news you need to work with. You need to look out for this major news. Okay, all this needs to be included in your trading plan. It has to be included in your trading plan. Okay. Thursday, 1:30 p.m. prelim GDP and unemployment claims from the United States. For GDP, they're not expecting any change. You can see the previous is 2.3% and the forecast is on 2.3%. It means they are not expecting any change. So if the actual comes out positive, if it is higher than the forecast, that will be good for the US dollar. And if it comes out negative for dollar, that will be negative for the dollar. I hope you're following. Okay. Then for unemployment claims, the previous is 219K, the forecast is 220K. So they are expecting increase. So if the actual comes out, if it is below the forecast, now this is unemployment claims. Unemployment place. So the value that will be released should be less than the forecast. If it is less than the forecast, for example, if the unemployment claim is 120, 170, if it is below 120, if it is below 220, that will be positive for the dollar. Remember, this is unemployment claim, not employment data, unemployment claims. Okay. So if the value released is less than this, that will be positive for the dollar. But if the actual value is higher than 220, that will be negative for the dollar. I hope that is clear. Then on Friday, Euro German prelim CPI, no time for that. It's all day. Then Canada will be releasing their GDP, that is gross domestic product, will be released on Friday from Canada, 1:30 p.m. So you know what to look out for. We're waiting for the actual value to be released. If you want to know more get more details about this data, just click on this folder. Okay, what is the news all about? GDP measures the change in the inflation adjusted value of all goods and services produced by the economy. If actual is greater than forecast, is good for currency. It is released monthly, about 60 days after the month ends. The next one will be March 28, 2025. Why are traders interested? Why are institutions interested? Why are investors interested in this data? It's is the broadest measure of economic activity and the primary gauge of the economy's health. If the GDP of a country is low, that will be negative for that economy. If the GDP is high, that will be positive for that economy. Nigeria GDP is low. That is why the dollar is gaining value. That's one of the reasons the dollar is gaining value against the naira. Okay, GDP is low. Compare Nigeria GDP with US GDP. The difference is much. That's one of the reasons. Okay, there are other reasons why the dollar is gaining value against like inflation rate, unemployment rate. These are some of the economic indicators we use to determine if a currency of a country would gain value over against the currency of another country. Okay, these are economic indicators we make use of. Okay, so there are several indicators. One of them is GDP, major indicator we use. Okay, and USD also will be releasing a major news, PCE price index. What is PCE? Change in the price of goods, and it is used to measure the change in the price of goods and services purchased by consumers, excluding food and energy. Okay. Why are traders interested in this? It's the Federal Reserve's primary inflation measure. Inflation is important to currency valuation because rising prices lead the central bank to raise interest rates out of respect for their inflation containment mandate. Okay, so if you want to know more about this data, just click on the folder and you get more details. Okay, so that will be it for fundamentals. There are no much fundamentals this week. As you can see on the calendar, no fundamental for GDP, for GBP, and also JPY. JPY. So if you're scared of trading fundamentals, you could just focus on cross currency pairs. Cross currency pairs, that's GBP, JPY, JPY pairs. GBP, JPY. There's no news for GBP, there's no news for JPY. Okay, so you might want to consider trading GBP, JPY. Okay, Euro, there is a major news for Euro. I would have suggested if trade on Euro, JPY. Okay, but focus on GBP, JPY this week. So that is it for fundamentals. Let's go to the charts. First, we need to know the strength of the dollar for the week. What is the trend for dollar this week? And let's make use of, let's check the trend on trading view. What is the trend for the dollar? It is very important that you know the strength of the dollar. Okay, because when you're trading the major currency pairs, the 7 major currency pairs, you're trading a major currency against the dollar. So knowing the strength of the dollar gives you an edge. It gives you an edge. It gives you an idea of what will play out on those major currency pairs. I hope you're following. So that's why it's important that you know the strength of the dollar. As I say, dollar is king. Okay, dollar is king. It's one of the most traded on currencies in the world. Okay, so you need to know the strength of the dollar. And the DXY is what we use in determining the strength of the dollar. DXY, that's dollar index. Okay, so let's see. So on dollar index, as you can see, it is obvious. You can see it just by looking at the chart. You can tell that the structure we have here is bearish. It is obvious, right? You can see it that the structure is bearish. This is a bearish structure. Let's start with the daily. Let's start with the weekly. Let's start with the weekly time frame. Let's start with the weekly time frame. So you can see the structure. You can see what we have on the daily time frame. This is a bearish structure. You can see what played out on the weekly time frame. I think price filled, the field. You can see this fair value gap. You can see this fair value gap got filled. Okay, this fair value gap got filled. And you can see there was a strong rejection. We had this fair value gap. Can you see this fair value gap? So this fair value gap got filled. And you see that this is a fair value gap. You can see that gap has been filled. That gap has been filled. Can you see that on the weekly time frame? And you can see the pattern we have here on the weekly time frame is a bearish pattern. This is a bearish pattern on the weekly time frame. So at the moment, the dollar is bearish. The dollar is bearish. You can see the dollar is bearish, and there's a high probability the dollar would come fill this fair value gap. There's a high probability the dollar would come and fill this fair value gap before going bullish. Are you following? Are you following? There is a high probability that the dollar would come and fill this fair value gap. Okay. Now the next area of liquidity is this low. That will be the next target, this low. There's a high probability that this week the dollar will hit this low. There are a lot of liquidity residing at this previous low. Before aiming for this fair value gap, dollar would want to clear the liquidity residing at this previous low. So the dollar is bearish. From what I see, from the pattern I see, dollar is bearish. Dollar is weak. Dollar is weak. If dollar is weak, you know what you should do on GBP USD, Euro USD, Australian dollar USD. You know what you should do on those pair. Okay, if the dollar is weak, you should be considering buying. If dollar is weak, every pair that has the dollar as the counter would be bullish. Every pair that has the dollar as the counter or the quote currency would be bullish. And if the dollar is bullish, if dollar is strong, currency pairs that have dollar as the counter will gain value. Are you getting me? If dollar is strong, currency pairs that have dollar as the counter would be what? Bearish. And every pair that has dollar as the counter would be bearish if dollar is weak. I hope you're getting me. I hope you're getting me. If you can hear me, drop a comment. Drop a comment. I want to be sure you guys are here. Are you following? Are you following? Drop a comment if you can hear me. Drop a comment. Drop a comment. I want to be sure you guys can hear me loud and clear. I hope that is clear. So that is it for dollar. So if we are considering going bearish on dollar this week, then we should be considering buying GBP USD, Euro USD, Australian dollar USD, NZD USD. Then we should be considering going bearish on USD CAD, USD JPY, and USD JPY, USD CAD, USD CHF. Okay, so let's go to the charts. The broker I trade with is Aurum Market. For those who are just joining for the first time, and for those of you who have been asking which broker do I trade with, I make use of Aurum Market. Aurum Market. Okay, Aurum Market. That's the broker I trade with. That's the broker I trade with, Aurum Market. So if you're considering operating a trading account with a reputable broker, a regulated broker, then you should consider Aurum Market. Okay, so let's start with GBP USD. GBP USD. What can you see on GBP USD? What can you see on GBP USD? If there's any pair you want us to analyze together, please drop it in the comment section. Drop it in the comment section. So let's start with the weekly time frame. Last week was, I think it was bullish. Yeah, last week was bullish on GBP USD, as you can see. Last week was bullish on GBP USD. Can you see that? Okay, so after the close of last week candle, what pattern do we have on a daily time frame? You can see there was a break from a resistance at this point. There was a break of resistance. Can you see that? This is a breakout from a resistance level. Okay, so let's go down to daily. What pattern do we have on a daily time frame? So you can see this is what we have on a daily time frame. This is the breakout from a resistance level. You can see this is a resistance zone. You can call it your supply zone. You can call this your supply zone. You can see this is a key level. Resistance, resistance, turn support, resistance, turn support, support, turn resistance, support, turn resistance. So this is a key zone. This is a key resistance zone. You can call it your key supply zone. It was a supply zone, but now it has become a demand zone because this candle broke out from this resistance. Resistance becomes support, or we'll say supply becomes support. You can see, so has been broken. And when there is a breakout from a resistance level, price has a probability, a possibility of pulling back. That is a break and retest. break and retest. So there's a high probability GU is going to pull back. You can see it's created a fair value gap. You can see there's a confluence here. Can you see there's a confluence here? Breakout from a resistance and fair value gap. And most retail traders, those who trade support and resistance, would want to wait for price to pull back to this zone before buying. Also, those who trade fair value gaps would also want to wait for price to pull back to this area. So there will be a lot of demand at this zone. There will be a lot of demand. A lot of traders will execute buy at this zone. You can see that. So there's a high probability that GBP USD is going to pull back to fill this gap before going bullish. This is where I will be considering going bullish on GBP USD this week. I want to see price fill this fair value gap before going bullish. Let's go down to 4 hour. Let's see what we have on 4 hour. Okay. Also on 4 hour, you can see we had a fair value gap here. The question now is, would price go fill the daily fair value gap? You can see there was a breakout on 4 hour from this point, and you can see price has filled that gap. So it's also possible for price to reject from this zone to start, continuing its bullish trend from this zone. As you can see, it's very possible. But as you can see, the candle that closed inside this gap is still bearish, so we can't buy. If we want to buy, we want to ensure that there's a shift in market structure on a lower time frame, 15 minutes or 5 minutes, before we consider buying. Okay, you want to be sure there's a shift in market structure on 15 minutes time frame. So at what level would the shift in market structure occur on 15 minutes time frame? The shift in market structure should occur at this high. This is an obvious swing high. This is the obvious swing high. This is where the shift in market structure would occur on 15 minutes time frame. So if you want to risk buying, okay, you should wait for the shift in market structure to occur, which will be at this level. This is the most obvious recent on swing high or your lower high. I hope that is clear. So that's my take on GBP USD. My bias on GBP USD this week is bearish. That's my bias for GBP USD. Sorry, bullish. Sorry. My bias is bullish. My bias on GBP USD is bullish. Now, if you look at 4 hour time frame, the fair value gap we identified on a daily time frame. You can see on 4 hour, the gap has been filled on 4 hour. So there's a high probability that price might not pull back to this zone. Can you see that? There's a high probability that price might not pull back to this zone, because on 4 hour, you can see that gap has been filled. Can you see that? That gap has been filled. Can you see that on 4 hours? So we could work with this range on 4 hour. Okay, we could work with this recent range on 4 hour. This low, this is the most recent range on 4 hour. So you could patiently wait for price to pull back to a discount area. Price is at a premium area, right? Is at a premium area. So you could wait for price to pull back to this discount area. Apply your Fibonacci and patiently wait for price. It's a probability, okay? It's a probability. Let's apply Fibonacci from this swing low. Let's see, swing low to swing high. Okay, so we want to see price pull back to a discount area. Now, at that discount area, we want to ensure that there is a fair value gap. There's an imbalance at the discount area. If there is no fair value gap at the discount area, price might not pull back to that discount area. Price might not pull back. But if there's an imbalance, if there's a fair value gap at the discount area, there's a high probability that price will pull back to fill that fair value gap before going bullish. So let's go down to lower time frame to see if, let's go to 1 minute, 1 hour, 5 minutes. So let's see on 1 hour. So you can see on 1 hour, all the fair value gap that was created has been filled. Can you see that? The only fair value gap we have on 1 hour is this. This is the only fair value gap we have on 1 hour, and price has already filled that fair value gap. Can you see that? So there's no fair value gap on 1 hour at the discount area. So there's a high possibility that price might not pull back to that area. But let's see 15 minutes. Let's see 15 minutes. Let's see if we can identify a fair value gap of 15 minutes. On 15 minutes also, we had a fair value gap here. It has been filled. So you can see on 15 minutes also, there is no fair value gap at the discount area. You can also see here, there was a fair value gap that was created here. Can you see that? That gap got filled. You can see also at this point. So this is the only fair value gap that has not been entirely filled on 15 minutes time frame. So since there is no fair value gap at a discount area, it's possible price might just keep moving, going bullish from the current market price. You can see that. So GBP USD is bullish. Is bullish. Okay, is bullish. Is bullish. I hope that is clear. I hope that is clear. If there's anything you want us to analyze, please let me know. We've spent much time on GBP USD. Let me know in the comment section. Now let's go to GJ. I'm seeing a very nice pattern on GJ. I'm seeing a very nice pattern on GJ. I'm seeing a very nice pattern on GJ. Let's start with the weekly. So last week closed strongly bearish. Why did last week candle close bearish? Let me show you why last week candle was strongly bearish. Okay, now the previous week was strongly bullish. Now after the formation of this bullish candle on the weekly time frame, if you go down to daily, you would find that a fair value gap was created on a daily time frame or 4-hour time frame. Let's go down to daily. Let's go down to daily. So you can see on a daily, we had a fair value gap here. Can you see that on a daily? So this pullback, this fair value gap could be the reason for the retracement or the pullback we saw in the market last week. You can see it filled this fair value gap. It's possible there's a fair value gap below this one. That is why price broke out from this fair value gap, the daily fair value gap. Let's go down to 4-hour. It's possible there's a fair value gap below. That is why price broke out. So you can see on 4-hour, can you see the reason price broke out from the daily fair value gap? You can see because there was a fair value gap below the daily, which is on 4-hour. Can you see? Can you see? If you apply your Fibonacci from this swing low to this swing high, you can see that price is currently at what? A discount area. This fair value gap is the reason for this pullback. You can see this gap has been filled. Can you see that the gap has been filled? So there's a high probability for GJ to be bullish this week. You can see the last 4-hour candle close. This is an hammer. This is an hammer. A strong rejection at a fair value gap at premium. Sorry, discount at discount. So there's a high probability that this week GJ would be bullish. There's a high probability that GJ would be bullish. Okay, let's see what we have on 1 hour. So you can see what we have on 1 hour. We had an hammer. The next candlestick closed bullish. You can see this is a bullish reversal pattern on 1 hour time frame. This is what? A bullish reversal pattern on 1 hour time frame. So with what I'm seeing on 1 hour and 4-hour, I think GJ is set for buy. GJ is set for buy. A lot of retail traders would have executed buy, and where would they have their stop losses? Their stop losses will be at this low. Most stop losses will be at this point. Most will be at this point. So there is a possibility that they will come for those lows before going bullish. So you either wait for sweep on liquidity to occur before you buy. Wait for sweep of liquidity to occur, or wait for fair value gap to be filled. Wait for fair value gap to be filled, or wait for sweep on liquidity to occur before you buy. If you go down to 15 minutes or 5 minutes, you'll be able to identify fair value gaps on 5 minutes or 1 minute time frame. So you can see so on 5 minutes, yeah, this is 5 minutes, there's a fair value gap here. So you either wait for this fair value gap to be filled before you buy. There's a tiny fair value gap here. Okay, you see it clearly on 1 minute. Okay, so you can see the fair value gap on 1 minute. You either wait for this fair value gap to be filled, or wait for them to sweep liquidity. Wait for them to sweep liquidity, which is residing at this previous low before you buy GJ. Before you buy GJ, wait for this fair value gap to be filled or wait for this liquidity to be swept before you go bullish on GJ. There's a high probability GJ will pull back to fill this liquidity void. This fair value gap, there's a high probability GJ will fill it this week. That's my take on GJ. GJ is one of the pairs I will be trading this week because the setup is clean. The setup is clean. It's a nice setup. It's a nice setup. So my highs is on GJ this week. Is on GJ this week. Any other pair you want us to look at? Let me know. Let me know. Drop it in the comment section. Any pair you want us to look at, drop it in the comment section. Let's look at gold. Gold is still very bullish. Gold is still very bullish. Gold is still very bullish. So you can see last week candle closed strongly bullish. Strongly bullish. Gold is still very bullish. Do not sell gold. Any sell on gold would be a retracement. Any sell setup would be a retracement. Gold is bullish. Gold is bullish. Okay, it's bullish. So you see how last Friday candle closed. See how it closed. It tested this resistance, which became a support. You can see price have been testing that level. This is the third time. This is the third time price tested this. You can see. So there's a strong rejection at this level. That's to tell you that gold is going to be bullish this coming week. There's a strong rejection. If you are considering risking selling, then you have to wait for price to break this low. You have to wait for price to break this support. This is a strong support. You can see that support has been tested several times. Has been tested several times. If the support gets broken, then there is a high probability that gold would fill this fair value gap. If it breaks that support, if a candle closes below that support, then it might want to fill this fair value gap. You can see there's a gap it's created here. It might want to fill that gap before going bullish. You can see this fair value gap it's created here. It might want to fill it. That's if it breaks out from this support. But at the moment, there's a strong rejection from this resistance, which has become a support. So this tells you that there is more demand at this level. There is more demand at this level. Okay, so let's go to 4 hour. So you can see on 4 hour also, this is a key support level. Can you see? You can see this is a key support level. You can see. You can see. So gold is still very bullish. It's still very bullish. It is still very bullish. It is still very bullish. I hope that is clear. My bias is still very bullish on gold. Very bullish on gold. I hope that is clear. Which other pair do you want us to look at? Let me know in the comment section. If you have any question, let me know. If you have any question, let me know. What are the challenges you're going through in trading? Let me know. Let me know. Let me know in the comment section. I'm here to help you succeed in trading. I'm here to help you succeed in trading. I'm here to attend to all your Forex trading questions. Okay? Okay, let's look at Euro USD. Let's see Euro USD. Euro USD. Let's start with the weekly. So you can see the pattern we have here is similar to what we saw on GU. That's because both pairs are positively correlated. If you go to GU, this is weekly on Euro USD, CGU, GU weekly also. If you would see that the pattern is, let's see, what's the pattern? You can see the weekly, similar pattern. Can you see that? The pattern you have here is similar to what we have on Euro USD. You can see. So resistance level has been created. A breakout from this resistance will be confirmation for buy. A breakout from that resistance will be a confirmation for buy. The 4-hour candle closes above that resistance. It indicates that demand is higher than supply. There's more demand. And when there's more demand, you expect price to go up. You expect price to go up. So let's see daily. What do we have on a daily? So you can see resistance has been created. Yeah. So wait for a breakout before you consider buying. This retracement, I think this retracement was to fill a fair value gap that was created after this engulfing pattern here. This retracement we saw in the market on that was on Friday. Yeah, Friday. I'm sure there was a fair value gap that needs to be filled. That was why price had to pull back. Let's confirm that on 4-hour. You can see that. Can you see that on 4-hour? That is the reason for the retracement. There is no fair value gap at a discount. You can see there's no fair value gap we can work with here. If there was a fair value gap at the discount, we would have waited for price to pull back to a discount before considering buying. But at the moment, this is where we have fair value gap on 4-hour, and that gap has been filled. You can see this fair value gap has been filled. You can see, and you can see the pattern that formed there. It looks like a bullish reversal pattern, but not confirmed yet. Not confirmed yet. Okay, so this is what we have on 1 hour. This was the fair value gap on 1 hour. You can see this gap has been filled. The gap has been filled. So there's a high probability that EU will continue with its bullish move from the current market price. Also take note that this level is an area of liquidity. A lot of retail traders would have executed buy, and where would they have their stop losses? Stop losses are residing at these lows. Stop losses are residing at this low. We also have a lot of retail traders who want to trade the breakout, right? A lot of retail traders want to trade the breakout. If a 4-hour candle closes below this support, many retail traders will see that as breakout from support and they'll want to sell. Then your stop loss, those who have their stop losses here, is a sell order. That is a sell stop order. When you place a buy trade and you set your stop loss is a sell stop order. Is a sell stop order. You're instructing your broker to sell at this low. So retail traders who trade breakout want to sell, and those who have their stop losses here would want to also sell at this point. So there are a lot of sell orders residing at this previous. So that is why the institutions want to execute their trade at these levels, because there are a lot of sell orders, but their plan is to buy. Their plan is to buy. So if they want to buy, they need a lot of traders who are willing to sell. Remember, for every buy trade, there must be someone at the other end who wants to take the opposite trade. If you place a buy, there must be someone at the other side who wants to buy. If you want to buy, it must be someone at the other side who wants to sell. So the institutions will always go for area of liquidity because they know that there are a lot of orders residing at that level. I hope you're learning. So this is an area of liquidity. So they might want to come for these lows before going bullish. And that is likely going to play out on Monday or Tuesday. It is likely going to play out on Monday or Tuesday. Okay, so that is it for Euro USD. Okay, that is it for Euro USD. Okay. Mr. Victor says we should look at USD card. If USD is going to be weak, then you should look for sell on USD card. Okay, if USD is going to be weak this week, you should look for sell. Look for sell on USD card. So let's start with the weekly. So you can see this. It's obvious on the weekly chart that Euro or USD card is bearish. It is obvious. Okay, liquidity residing at this previous high has been cleared. You can see the liquidity residing at this previous high and all these highs has been cleared. I think 3 weeks ago it has been cleared, and after clearing the liquidity, you can see what played out. It started selling. You can see. Started selling. Then let's see daily. You can see what we have here. Okay, there's a shifting market structure here. Shifting market structure here. You can see there's a shifting market structure here. Can you see that? Price ranged from this point to this point. So what they did was to clear buy side liquidity. You can see when the market was in the range,
or went into a range, a lot of traders will be executing buy, sell, buy, sell, buy, sell, buy, sell, and their stop losses will be the highs and the lows. Highs and the lows. So the first thing they did was to clear the liquidity, buy side liquidity. All the stop losses inside this previous high needs to be cleared before they will sell. You can see. So there's a shift in market structure on a daily. You can see. So there was a breakout here. So this pullback would just be to retest. You can see there was a breakout from this support zone. Okay, you can call this your support zone, which has become a resistance area now. So there was a breakout from this zone. After a breakout, there should be a retest. So they might want to retest this zone. As you can see also, there's a fair value gap that was created here. Can you see there's a confluence here now? There's a fair value gap here. Let me go to 4 hours so that you see it clearly. You see the fair value gap. You can see the fair value gap here. You can see. You can see this tiny fair value gap here. Can you see the gap in between this candle and this candle? You can see there's a fair value gap here. And this is an area of liquidity. This is an area of liquidity. You can see price went into a range from this point to this point. A lot of retail traders would have sold. Many would have bought. So what they want to do is to clear the buy side liquidity residing at this high, and there's a fair value gap above this buy side liquidity. So this is where you should be considering selling if you want to sell USD CAD this coming week. There's a high probability they will clear the stop losses residing at this high and also fill this fair value gap before going bearish. Okay, so if you're considering trading USD CAD this week, this is where you should consider selling USD CAD. I hope that is clear. I hope that is clear, Mr. Victory. So that's my take on USD CAD. They should fill this gap between Monday and Tuesday. They will fill this gap. Then once this gap is filled, look for your entry setup. And once this gap gets filled, look for your entry setup. Look for your entry setup before you sell. Don't just jump in and start selling because the fair value gap has been filled. No, you need to have your entry setup. You should see your entry setup before you sell, because it's possible they will break out from this zone. Price might just keep going bullish. So it's your entry setup that will tell if you can go bearish after the fair value gap gets filled. I hope that is clear. I believe you all participating in the live stream, you have your strategy. If you don't have a strategy, you need to learn a strategy. You need to have a strategy. Okay? You need to have a strategy you're trading with. If you don't have a strategy, you are gambling in the market. And as a gambler, you will always lose money in the market. Okay? You would always lose money in the market. And the truth is that there must be losers in the market for others to win, for others to be able to cash out. There must be losers in the market. You just have to decide that you won't be the loser. You won't be the one donating to others. It's a decision you have to make. That's why you need to study. You need to do back testing. You need to have an hedge. You need to have a strategy. Okay, if you are losing in the market, then it means there's still something you don't know. There's still something you don't know. So keep learning, keep learning, keep learning. Ask questions. If you don't understand something, ask questions. Okay, ask questions. Nobody is an island of knowledge. Nobody is an island of knowledge. Been trading for over a decade and I'm still learning. I'm still learning. Okay, so don't be ashamed to ask questions. Don't be ashamed to ask questions. I'm talking to those of you who are new. Those of you that are new that I think you can do it on your own, please. Don't wreck yourself, please. Ask questions from those who have been in this game for years. To require you paying for a class, pay for that class. It will save you time, it will save you energy, it will save you money. To save you time, money, and energy. If you think you have the time, you have the energy, and you have, the money to waste, then you can just try do it on your own. After 2 or 3 years, 4 years, we'll still be here. Okay, we'll still be here for you to come and share your story with us. But it has never ended well for those who try to do it on their own. It takes years. If you don't have all that time, please pay for mentorship. I'm not saying you should learn from me. We have several mentors online you can learn from. Several. Even if you go on YouTube, you still have some free material you can access. It's just that most of those materials are not organized. They are just scattered. So as a newbie, you don't know which of the materials to study. Okay, so that is it for USD card. Which other pair do you want us to look at? Okay, someone says look at Australian dollar USD. Australian dollar USD is negative correlated with USD card. So if you're considering selling USD card, you should be considering buying Australian dollar USD. Okay, Australian dollar USD. Let's just look at the chart. Let's look at the chart. Okay, let's start with the daily. Let's start with the daily. Please, if you can afford to pay for mentorship, please go for mentorship. Go for mentorship, please. Go for mentorship if you can afford it. So last week was strongly bearish on Australian dollar USD. Strongly bearish. Why? This is a break from a resistance. Can you see that? There was a break from a resistance. Okay, so this is what's it called? This is a break and retest. There was a breakout from this resistance, and you can see price has retested that level. So there's a high probability. And also, if you go down to lower time frame, I'm sure a fair value gap was created there. You can see on 4 hour we had a fair value gap here. Can you see it? We had a fair value gap here on 4 hour time frame. You see the gap here, the fair value gap here. And you see the fair value gap. You can see that gap has been filled. Can you see? For those who trade resistance and support, this will be a breakout and retest. For those who trade fair value gap, price has filled fair value gap. And if you apply your Fibonacci tool, I'm sure price is at a discount area, is below equilibrium. Let's see. Price is below equilibrium, I'm sure. Right? This is equilibrium. So price is at a discount area. Price is at discount. It's at discount. Okay? It's at discount. So this is a bullish setup. As you know, this is a level of liquidity. This is an area of liquidity. A lot of retail traders would have jumped in buy, and their stop losses will be residing at this low, and this low. There's a high probability they will clear the liquidity residing at this previous low before going bullish. So patiently wait for this low to be cleared. Probably tomorrow, Monday, this low will be cleared. Wait for this low to be cleared before you buy Australian dollar USD. I'm trying to read your comments. William. I can't see it. Hold on. Trying to read your comment, Williams. Let me see. Okay, why should DXY continue to rally when news is negative? Why should DXY continue to rally when news is negative? You mean news is negative for the dollar and the dollar keeps going bullish? Is that your question? Is that your question? It is possible there are areas of liquidity or imbalance that need to be filled. Are you getting me? It is possible that there are some areas or some liquidity void that needs to be filled. Are you getting me, Williams? Probably price is at let me say price at premium. It needs to pull back to discount before going bullish. So when the news is released for the dollar and it is positive, and you see that instead of the dollar to be bullish, it is bearish, check the chart. It is likely there is a fair value gap or liquidity that needs to be cleared before the fundamental will play out. Are you getting me? Before the fundamental will play out, there is likely it wants to fill a fair value gap, clear liquidity, because before the news is released, a lot of retail traders would have placed trade and they will create levels of liquidity. So when the news is released, it's possible for the dollar, it's possible for dollar to lose value. Probably it wants to face some fair value gaps before it goes bullish. So it's not immediately the news is released and it's positive for the currency that the fundamentals will play out. Sometimes it will go for liquidity before it plays out. Is that clear? I hope that answers your question. So I think that will be all for tonight's session. If there are no questions, that will be all for tonight's questions. I think we've looked at the major currency pairs, right? We've covered a lot tonight. We've looked at Euro USD, and like I told you guys, these pairs are positively correlated, negatively correlated. So we don't even have to analyze all the pairs. If we look at GBP USD, Australian dollar USD, then you should know the bias for Euro USD and NZD USD. If we look at USD JPY and USD CAD, you should know the bias for USD CHF. If you look at USD JPY and GBP JPY, you should know the bias for all other JPY pairs. They are either positively correlated or negatively correlated. So that will be all for tonight's session. I want to appreciate every one of you. I want to appreciate Mr. Daniel, Mr. Victory, Mr. Joseph, Mr. Emmanuel, and Mr. Williams. I want to appreciate you all for your participation, and my prayer for you all is that this week shall be a profitable week. I want to believe you have your plan, your trading plan for the week. If you don't have your plan for the week, you have already planned to fail. No amount of prayer that would make you successful or will make you profitable. If you don't have a plan, you've already planned to fail. So there's no amount of prayer I would make that will make you profitable. So if you don't have a plan for the week, after this class, go and create your plan. Create your plan for the week. If you want to be profitable this week, you need to create your plan. Which of the sessions are you going to be trading? Which of the instruments are you going to be trading? What is your risk parameter? How much are you willing to lose this week? Focus more on your losses, not profits. Focus more on your losses, not profits. You should know how much you're going to lose on the trade before you execute the trade. If you don't know how much you're going to lose on a trade before executing it, don't execute the trade. Risk first before profits. Risk. You should be more concerned about the risk before profits. Okay? Manage your risk properly. Manage your capital properly. Then you make profit. Profit will come. You'll make profit, but don't focus on profit. That is why many traders are not successful. Their goal is profit, 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 profit. That's their focus. Focus on the loss, more on losses than profits. Okay. All right, guys. So for those of you in the VIP group, we're meeting on Tuesday. The Zoom session on Tuesday. We'll meet on Tuesday, Zoom session, and on Wednesday, Zoom session. Then I think on Wednesday I will come on live. I think there's a major news for the dollar. There's a major news for the dollar. So on Wednesday, I will come on live. Maybe during New York session, I'll come on live on Wednesday. But for those of you in the VIP group, we'll be meeting on Tuesday. Okay, Tuesday by 8 p.m. 8 p.m. Okay. All right, guys. Do have a wonderful night.